Let's start today with this Biden tax increase that he's proposing. And he says it's not going to affect anybody making under $400,000. Well, there's not enough money to be had if you don't. The majority of Americans make under $400,000. So it seems to be the whole thing seems to be a joke here. What is he trying to do with this?
Well, John, it's interesting. If you listen and parse his language recently, he has dropped the below $400,000. So he has talked a number of times about how the Trump tax cuts, in Biden's view, is only available to millionaires and billionaires. Of course, we cut taxes across the board in 2017, and many of those provisions are expiring. It's not just the top rate, it's all 5 rates are scheduled to rise at the end of 2025. And Joe Biden recently has said that he wants the whole thing to expire. It's not just the top rate, but the whole thing. The doubling of the standard deduction is another thing that expires. And so, right now, if you file your taxes, the first portion of the income is not taxed at all. That's called a standard deduction. We doubled that under the Tax Cuts and Jobs Act. But John, even if he does only raise the rate on people making more than $400,000, which again is not what he's been saying recently, it's not as if that doesn't flow through to others. And so you yourself, you own radio stations, you know that if you have to pay, that you pay taxes as an individual on the earnings, presumably from your radio stations. Any business operator who acts as a sole proprietor or is a single owner of the business, or they're part of a partnership, or they're even part of what we call an S corporation, they pay taxes on their business at the individual level. And if their taxes go up, that's less money for investment, that's less money for hiring, that's more price increases that have to be passed on to the consumer. And so when we see taxes go up, we know that it doesn't just fall on the person who's actually writing the check. It flows through the economy to other participants, and that's going to include both workers and consumers. And that's why when we cut taxes, John, during the 2017 Tax Cuts and Jobs Act, following it, we saw between 2018 and 2019, a $4,000 increase after adjusting for inflation in household income. So people had $4,000 more purchasing power after we enacted the Tax Cuts and Jobs Act than they had before it. And that's a direct implication of the kind of tax environment that we have. So Joe Biden, he can talk all he wants about how it's only going to affect those over $400,000. That's just in complete conflict with the economics literature and who is it that actually bears the consequences of tax increases.